Three deductions, and almost everyone is claiming at least one of them wrong. We're talking the home office, meals, and mileage. Now, these are the three most common deductions that small business owners will take. And they're also the three that the IRS knows are getting the most abused, which means they're also the three that are probably going to get you a second look by the IRS. Here is the good news, though. All three are completely legal. You can take them, and you're actually probably qualifying for way more than you think. You just need to make sure that you are claiming it in the right way. And you want to keep that one thing that will actually protect you. So today we're going to go ahead and talk about these three deductions. For each one of them, I'm going to give you the same three things. If we haven't met yet, my name is Jen Nixon. I am an AFSP tax analyst here in Houston, Texas. And I help small business owners keep more of what they earned legally. And this is the T on taxes, where I give you the T on all things to do with your taxes. Now, for each of these three things, I'm going to give you the real rule, the myth that is getting everyone in trouble, and then, this is important, the documentation that you actually need to protect you if anyone does ask about it. So the rule, the myth, and the proof. Okay, the first deduction, the home office. The rule is to claim the home office, the space has to be used regularly and exclusively for your business. Regular means that you are working there consistently, not once a quarter. Exclusively means that it is all being used for your business. It's business only. Now, it doesn't have to be an entire room. It can be a dedicated corner that totally counts. But the second that space gets doubled up, then you've got a problem. Now, the myth. I work at my kitchen table, so I can go ahead and claim my kitchen. Okay, I'm sorry, but no, you eat dinner at that table. The kids are doing homework there. That's not exclusive use. It just doesn't qualify. This also applies to that guest bedroom that gets used, maybe even if it's only used on Thanksgiving. If it's got a second life to it, then it's completely out. So here's what does work. Now, the desk in the corner of the room that you have it set up for work and only work, that is a legitimate home office. Even if the rest of the room is like your living room, you can still use that particular space. And renters, you can still take advantage of this too. You do not have to own your home. You just have to use that space regularly and exclusively. Now, how do you claim it? You can claim it two ways. There is the simplified method, which allows you to take $5 for each square foot up to 300 square feet. So the max credit you could get on that is $1,500. And this is a very quick and clean way. There's no receipts that you need to track because you're just doing the dedicated space area for your deduction. That's simplified. The actual method. The actual method is where you take up the percentage of your home and your office. So what you're going to do is you're going to take the square footage of your office and then the square footage of your home and just go ahead and divide that up. And then that gives you the percentage that your home office is to your house. And you apply that percentage to your real cost of having the home. So whether it's your rent, your utilities, your insurance, and if you are meeting clients there, you need the landscaping, it's all a percentage. So the only thing is that there's more paperwork, but for a lot of people, it is a much, much bigger number. And one line before we move on, this deduction is for self-employed people. This is not for those people who are W-2 employees. So if you are a W-2 employee who is working from home, you can no longer take that deduction on your federal return. Deduction is for just business owners. Third thing, the proof. What proof do you need? What I always suggest is take a photo of your space. A photo is 1,000 words. You want to measure the space. Also, to go ahead and record the square footage, you want to make sure you write that down. If you're using the actual method, you want to make sure that you're keeping all of your receipts, including your rental invoices and your utility invoices. A picture and a number will pretty much protect the whole thing. Deduction 2, business meals. Okay, this is actually where I see most people give me some makeup numbers. And it's also the most missed one because it can get crazy. Now, the rule is a business meal is generally 50% deductible. So you are only getting half. And what a lot of people will do is they will take the entire meal, and you can't. You can only do up to 50%. Now, there are exceptions to that rule, but we're not talking about that in this video. We're talking about the general rule, which applies to most business owners. Now, what constitutes a business meal? A business meal is a meal with a client, a prospect, a vendor, a business partner. This is not you going on your lunch break or you having lunch while you're running around doing errands. No, unless it's a meal that you are having because you are traveling for business. So if you have meals like because you are out of town, yes, you can do that. But if it's just that, hey, I want to eat out of the office today, I don't want to eat my sandwich, no. There has to be a real business purpose. So the myth again, on this one, the two big ones, and they end up costing people in opposite directions. Myth number 1 is that meals aren't 100%. No, there was a temporary 100% rule for restaurant meals, but that was back in 21 or 22. And that was just to help restaurants during COVID. That expired. That was very short-lived. We are back at 50%. It was very nice when we had 100%, but we're back at 50%. So if anyone is still telling you that it's 100%, then they're just a few years behind. All right, and then the second myth that I have here, and this is actually an expensive one, entertainment is not a meal, okay? Taking you to a club or to a sportsing event, ball games, golf, concerts, these are not things that you're using to schmooze your client. I'm sorry, but these are actually deductible. They are not allowed. And you have not been able to deduct it since at least 2018. Now, if you buy a hot dog and a drink at a game for your client, yes. Okay, that's billed separately. That's something different. Yes, that's allowed. But the ticket into the ball game, no. One update for anybody who feels like they need to feed their team, starting with like meals you provide for your convenience, like break room snacks, work lunches, things like that. We've talked about those completely dropped down to 0%. Okay. Again, you cannot take those deductions. They used to be 50, but right now, if that's you, just talk to me because your books need to be handled. Okay. Just a little bit differently. All right. So the proof. All right. This is where meals live and where they die. A credit card statement that says Chili's on it, it's not enough. Okay. It proves that you just spend the money, but it doesn't say that it was for business. And that's why it's important that you keep those receipts. You want to write down who you were with and what the business purpose was, just so you don't have to remember later if you ever are about an audit. A lot of times you'll get an audit for something that happened almost 5 years ago. So are you going to remember that lunch with Maria where you discussed marketing contracts 5 years ago? Probably not. So you want to write that down on the receipt. It takes about 10 seconds. And that one difference will go ahead and be the difference between a deduction that holds or one that will completely disappear. All right. If you don't scan it, then make sure you are at least taking a snap. Everybody's got a camera phone now. Snap a picture of the receipt right there at the table. Do it before you leave. That way you don't have to worry about the paper fading or being blank by March, right? All right, quick things. If this is just kind of clearing some things up for you right away, please go ahead and hit subscribe. I do these every week for small business owners who would rather stay ahead on their taxes instead of behind them. So deduction 3, mileage. It is a great deduction. And there's something new for 2026 that you do need to know. Now, the first rule is when you drive for business, you can deduct it one of two ways. You can deduct it either the standard mileage rate or the actual car expenses. Now, most business owners tend to use the standard rate just because it's flat out simpler. But here's the twist. The IRS almost never changes mid-year for their rate. They have been doing it a lot lately, though. They did this a couple years ago, and they did it again here in 2026. So because of the fuel prices jumping up as they have, there has now two rates. And this is why it's important that you have been documenting your mileage, because all the miles that you drove between January through June are at a 72.5 cent per mile rate. And then the miles from July to the end of this year, 76 cents per mile. That's why you want to make sure that you have that written down. So for this year, you just can't just go to your tax pro and say, hey, yeah, I did 30,000 miles. When? They're going to need to know, and you're going to need to know if you're tax returning yourself. You're going to need to know, what did you do from January to June, and what did you do from July to December? You're going to need to have that broken down. Now, here is the biggest myth that I have. And unless you're an Uber driver, the myth of I drive for work, so my commute counts. It does not. Driving from your home to your business office, to your regular place of work, is called commuting. And commuting is never deductible, ever. Everybody's got to commute. You got to get to the work somehow. Now, what counts as business driving is going to a client, going to the bank for business, going to pick up supplies like craft supplies, going to job sites, or you're going to work locations. So let's say you're going from one job site to another job site, or one restaurant to another restaurant. The trip to your first stop and the trip home can be a little bit tricky, because that's exactly the kind of thing a home office can actually change. Because if your regular place of business is your home office, then yeah, that's fine. But like for me, I have an office at home, and I have an office that I meet clients at. So for me to go from my home to my office where I meet clients at, since I consider that my regular place of business, that's a commute. Now, if you're working from home and then you are going to meet a client at a house, that is fine. That's not commuting. That's perfectly fine. But if you have a desk at your brokerage, then no. So again, just plain commuting is completely off the table. That's a myth. Now, one more thing, you can't run the standard mileage rate and also write off gas. So you can't run the standard mileage rate and write off gas and repairs on top of it. The standard mileage rate is already including that. The gas, the maintenance, the insurance, depreciation, it's including all of that. So you can do one, but not both. Now, the proof that you need, and please hear me on this, if you ever plan on taking a mileage log, because this is one of the biggest things I see hit people the hardest with audits, you need a mileage log. Whether it's digital, physical, you need a mileage log. I have a mileage zine that I sell that you can put in your pocket. You can put it in the glove box. Just look for that video. It has a link there. You want a mileage log, and you want something, a real one. You don't want to have to invent this in April. You do not want to do that, or even at the audit 3 years later. Because in the mileage log, you have to record each business trip, the date, where you went, the business reason, who you met with, And of course, the mileage. There are phone apps that will help you track that, where you just automatically click the button on and off, and it will follow your GPS. There are phone apps that will do this for you automatically. And it's perfect. There just might be a small subscription for it. Also, write down your odometer on January 1st. And then on December 31st, you're going to go ahead and write your odometer number then, because that will give you your total mileage for the year. You don't have to track your personal miles. That's just a given when you take out your business miles. Now, if you're using your car 100% for business, that's different. But if you are using this car in any shape or form for personal business, as well as like you only have one car and you're using it for personal and business, then yeah. IRS loves to test mileage because most people can't back it up at all. So be that person that can have that mileage log. There you go. That's the 3 deductions and the same 3 moves every time. We're looking at the rule, the myth, and the proof. Again, home office, it's regularly and exclusive, not the kitchen table. And you can easily prove it with a picture and some measurements. And then meals, they are 50%, not 100%. Entertainment is not part of the program. That's 0. And you can prove this by having it in writing and having a copy of the receipts in some shape or form. And then 2, the mileage. Just remember there are 2 rates in 2026, and then where it splits in July. And then just remember, commuting does not count at all. And you can easily prove it with that mileage log. All right. So I hope you're noticing a pattern in all of these. It's documentation. Each one of them is asking for the same thing. So just remember, the deduction is completely real. It's just that you have to have the documentation. That's what it comes down to. Write-off isn't what protects you. The proof is what, and that's the documentation. So if you're not sure that you're claiming these right, or you've got a shoebox of receipts and you have no idea which one counts and which one doesn't, just send me a DM. Put a message in the comments. I can easily answer those kind of questions. You can always send me a message in the comments. You can send me a message on my website at nixon.com. Either one. There's also a link to book a consultant if you want something in more in depth. Just look down below. All right, and if this helps, please hit the like button. It allows more people to see my videos, and it helps me out with the algorithm. And subscribe so you don't miss the next tea on taxes. Until then, keep on sipping. Bye. Until then, keep on sipping. Bye.